my gosh, guys, this is ridiculous. Are you serious?
It's tough. That thing's...
Did you glue these things together, bro?
There you go.
Oh.
That's a good one. Don't worry, buddy.
Bro, this house, look at this house.
You like the house?
You're gonna make like $1 billion on this house.
I wish. We are at a round square table here, having a round table discussion. Pace has got his entourage. You can't see him, but you may hear him in the background shortly. We'll be playing the game of Jenga and talking about today's current real estate topics that are trending.
Love it.
What's up, baby?
So, little inside secret about Zach Kepes. So, Zach Kepes has changed my life in tons of ways. I've learned tons of things with him. He used to go on appointments with me. You even went on appointments with me and my wife. Game changer, amazing relationship in my life. One thing that I haven't thanked you for enough is introducing me to coconut oil.
I love that.
Legitimate.
I love that. That's right.
If y'all are not having with coconut oil, I don't know what you're doing in your life.
It is amazing. All right, good to see everybody. Have a good day.
A lot of things. It depends on who you are, right? So if you're Zach Kepes and you've got hundreds of single family properties, there's a possibility that Zach Kepes would potentially do a big refinance on some of his properties depending on when he bought them. But knowing where you are in your leverage points, I doubt that half a point's going to really budge anything that you're doing.
So it's interesting how I like playing the perspective of you to me and me to you. I'm thinking nothing happens to your business because your rates they're already fixed. They're great. Yeah. Nothing really changes in your stuff unless you're maybe going to sell into the market, get people excited about taking some stuff out for you.
Okay, so I've got a couple of houses. I've got a house in Atlanta, Georgia that's ARVs like 1.4. We've got it listed for 1.4. I bought it for $900,000 on seller finance at 3%, but I have a 5-year balloon.
Got it.
So my balloon comes up in a year and I'm like, you know what? Let me just throw this out on the market now that rates are going down half a point.
Smart.
So I'm mostly testing that one, see if I can pull that money and recapitalize somewhere else, right?
Yeah.
And then I've got a couple of other properties, 5 of them. They're all in Phoenix, Arizona. Good rates, but I feel like the appreciation I sucked out all the appreciation. I bought them in 2019. They rode that strong wave all the way through. And I'm like, you know what? Let me take some chips off the table. Maybe get all that money 1031 into something a little bit bigger. Maybe an RV park. I'm loving my RV parks right now. And we're mostly testing because my rates are really good. Unless I have a balloon, there's no reason for me to mess around with those rates.
Absolutely.
And my equity, you and I use our equity differently. You have way more equity in your properties than I do, but I leverage my equity as collateral to go get private money to go buy more stuff. You will refinance stuff and get chunks of money, swaths of money, reinvest that money somewhere else tax-free. Right.
So I cross-collateralize. I don't really refi, but in essence, yes, I cross-collateralize multiple homes. So where this impact is major for me is on my larger line of credit is directly correlated to the prime rate. So when I was expecting
you've got a floating rate.
Point, it floats on some of my debt. My other debt is fixed. So I have some good long-term takeout debt on 20-year amortization. My other debt is 2 or 3 years floating debt at a prime minus product with a commercial bank.
That shows up for you on a monthly P&L where you're paying less money on interest that you currently have money out on right now.
Absolutely.
Does it motivate you to go buy more stuff right now?
Not necessarily. I mean, it just frees up, it gives me more cash flow, number one. And with the pricing, I'm excited. It gives, a little more consumer confidence going into the market, where sometimes it's not as motivating when the rates are prime's 8.5. Now it's going down to 8. Right. And then it's already factored into mortgage rates, but it gets consumer confidence up. So people who are sitting on the sidelines are now saying, oh, maybe it's time to make a move. And I love your theory, by the way, about I'm not going to wait till the balloon. I'm going to test the water. You don't have to sell. You'd like to sell, but it's you're in the driver's seat. You're in the leverage position in a positive way. Right.
So the other thing too is that consumer confidence is super important. What I fear on the bad side, right, for people outside of you and me who we already have momentum, we can ride the wave of the rate going down. You also mentioned it's like, it's not going to make a big difference. So there's a bad side to this I want to get to in a second, but I feel like the really high rates have put handcuffs on a lot of people, right? All half a point has really done is notch those handcuffs down 1 notch so we have a little bit more breathing room. But people are still locked in. I don't think it's going to change the market dramatically other than the confidence going in. And my feeling is like the Fed is not supposed to be messed around with by the federal government. But I feel like the election is coming up. Some manipulation is going on right now where they're saying we need to make momentum. We need to build up momentum so that we have momentum going into the election cycle, which is like 40 days. The bad side of this is that property prices are going up or down.
Well, nothing's really happening this second, in my opinion. Prices are going up, specific to Arizona, right? You have stuff nationally. So for me, I haven't seen a major shift in terms of pricing across the board. It's been pretty stagnant. They say it's going up 1 or 2%, so small amount of appreciation. But even so let's play this out from economics, supply and demand, simple macroeconomics. If rates come down a little bit and people that were holding off to selling and holding that inventory now say, you know what, now I can sell because the rate's going to be justifiable to buy another home, that increases the inventory. And then the demand, it spurs demand. So there's kind of an equilibrium. Enough people are going to trickle. There's nothing major happening right now, right? It's not like all of a sudden my showings on this particular home, I have 20 showings today and yesterday the rates went down 0.5 point. What's transpired? My phone's not ringing this exact second. So there's a trickle situation that's about to transpire.
Yeah, I don't think that there's going to be a massive run to the bank. I don't think anybody's going to be out there selling their houses like crazy. I think you're going to see some more activity. But when they lower rates again, they say they're going to do it again this year in the fall. They say they're going to do it again in Q1. I think that's when you're going to start seeing actual, real significant movement.
Sure.
Right now, guys like you and guys like me are like, let's see how I can play around with a couple of my cards, and that's really all that's going to matter. I think politically, it's more important than it is economically for guys like you and me.
Kamala's going to say, you wondered what I did in the last 3.5 years. Well, look what I just did for you.
Yeah.
I lowered the rates. The economy's good.
Look at me.
The stock market today is now, the Dow Jones closed, I think, at an all-time high, if I'm not mistaken.
Don't look at immigration. Look over here.
Yeah.
Right?
It's
Slide
distracting.
It's distracting. The other thing is fix and flippers. If I'm fixing and flipping, typically I feel way more confident when rates are on the downside because I know I'm going to buy the deal today at 350 that has an ARV of 700, let's say hypothetically. I feel confident at that target in 4 months, 5 months. If rates are on their way down, I feel confident that I'm going to hit my target. Sure. If rates are on the way up like they were in 2022,
that's a great point, right?
There was 5 houses that we were flipping in Mesa. I ended up just doing the BRRRR method, refinancing and keeping them in my portfolio because all of my value came down so significantly. I was like, oh my gosh, we missed our target. I'm keeping these properties. I'm going to refinance and I'll just refinance and keep these houses. So I think flippers are going to spur up a little bit. Not significantly, but you're going to see some activity. And then when rates go down again, I think we're going to start seeing a little bit more of a mad dash.
Yeah, it's interesting. So I love like the speculative aspect of just the projection of it and anticipation. In other words, you work with a lot of wholesalers. You buy from wholesalers. Their mentality is, hey, let's test the waters now. Hey, did you hear about that 0.5 point? And guess what? You anticipate. It's already, speculated that November and December, we're probably going to get another quarter and a quarter. So the time you acquire this from me, Pace, that house, is going to go up more than you think. It's 450 ARV today. But by the time you dispo that in January, February, it could be a 375 or a 380, you know, so you should buy this deal.
Consumer confidence is better than the actual interest rate going down.
Right.
Which is so interesting.
Right.
Okay, let's see. I could be ballsy and like really mess with this and like go here and just be a total asshole, but I don't think I'm going to do that today. I think we're going to, okay, there we go. Boom. And by the way, Zach, when you do Jenga, you have to put it back on the top.
Oh, excuse me.
Okay.
Yeah. Like that. Learning today. We're learning.
All right. Rising home and rent prices. What do you guys think about this?
First thing that comes to mind is how do you make money in that, right? So Zach is honestly you can tell by the way he talks, right? Can you guys tell he's hyper intelligent? Or he's 10 steps ahead. Zach is probably going to look at a situation and go, all right, rates are going up. This is how, or not rates are going up, but inflation is causing rents to go up. What do? I'm curious if a guy like you who's primarily been in the leasing to a single family market is contemplating getting into more co-living stuff. Because you can go, I can take the same asset, dice it up in 4 or 5 rooms, or maybe 7 rooms, depending on the size of the footprint, and I can amplify my cash flow, even though my management maybe becomes a little bit more of a headache. I think co-living is going to be like the next 10 years. It's going to be like Airbnb was from 2010 to 2020. I think it'll be the wave of the next 10 years.
Yeah, you're big on that. I see that. It's interesting. So the reality for me is I was excited about Airbnb. I'm looking at my buddies doing 2, 3, 4, making hundreds of thousands. I'm like, oh, I'm going to try it, dip my toe in the water. I got into Airbnb. I did one or two, and it sucked for me. I didn't like it. I felt like I wasn't a fan. I wanted to try it out. Maybe I had the homes in the wrong location. My homes were beautiful, fully furnished, jacuzzi, the heaters. I even had a third party tell me what to do and manage, and it sucked. I just didn't enjoy the experience.
Did you miss out on, so I know you know your tenants intimately. You'll go to their birthday parties, they give you checks, you go drive around, you and your dog Buddy will cruise around and be, little buddy cop movie. Did you miss that aspect of it? Or was it just, I don't like the complainers, the Karens, the this, the that? What was it you didn't like about Airbnb?
I didn't like the Karens, the complainers. We had a perfect home. Everyone's, depending on their day and what's transpiring in their life, they show up. The jacuzzi only got to 103, Zach. I needed it 105. I can't believe I'm spending 150 a night and it's only going to 103. 1-star review. That 1-star review, people see that and they say, I'm not going to rent this place. It's only going to 103. Yeah. How can I have a business contingent on some lady or man that's having a bad day or going through divorce that no matter what, they're not going to be happy and give me a 1-star review? I don't want a business predicated on somebody's bad day. Yeah. Plus the amount of attention to detail and service on that. We're in the service business, but I'm always been a set it and forget it guy. I want to buy something, know what I can yield at 8 to 10%. I'm good. I don't need to start getting crazy. The other thing that I don't love about the room shares, I'm sure you get more cash flow, but you start chopping it up. You put a little bit more money into the homes, probably more liability with people living there. To me, I could just, it's a cluster. You have multiple cars and motorcycles on one home. I can see the neighbors getting upset. I understand the cash flow aspect of it and I get it. And people are doing it, making good money. But for me, I don't want to chop up my home and then unless I need to liquidate it for some reason. I don't, but I'm a contingency guy. So if I had to sell it, who's going to buy a home with 9 bedrooms and 6 baths and no living space and 20 refrigerators?
A Mormon, bro.
There you go. Okay.
You are 100% right. So the way I look at it, as you've always been an anchor in my life, I always go back and go, what would Zach Kepes do? Right. And you're way more of a long-term guy. I'm 85% boring rentals, 85%. The other stuff is I'll look at a deal. Let's say I've got a deal in South Phoenix right now. Somebody sent me, I turned it down. I don't want the area, but I looked at it, I go, the only way this works is with co-living. Right. I could buy it with a 2.5% interest rate, but the problem is the purchase price is so high because they bought the thing in 2020. Sure. And I look at it, I go, can't rent it. Not a deal for me. They're trapped. They don't have enough equity, whatever. I look at it, I go, that's a co-living property. I would then do a co-living property on that if and only if it doesn't cash flow as a long-term rental. So for me, I'm staying long-term rental only. The only way I go co-living is if it does not cash flow the other way. And the floor model is already a 4-bed, 3-bath.
That makes sense. But now let's play this out. So you don't love the neighborhood. In an inferior neighborhood, is there an opportunity? Is there a lot of people that want to be in a lower income neighborhood and have? The
neighborhood for co-living is primarily, you want to be focused on public transportation because most of the people that live in our co-living properties don't actually have their own car.
That makes sense.
Super interesting. So like my first thought was, you're going to have all these people with cars. It's about half your tenants have cars, the other half don't. And so they walk to the bus stop, they drive to work, right? So it's really interesting the stuff I've learned. So that neighborhood doesn't have, it's like a mile to any public transportation. So it wasn't the neighborhood so much, it was the neighborhood in conjunction to its location to public transport. Yeah.
And then so again, playing the contingency mindset, what happens if there's laws and legislation and neighborhood stuff that says, hey, all of a sudden there's X amount, of multiple people living in a house or so many different leases and subleases and all that stuff. What transpires? You just spent what's the average cost to stabilize?
40 grand.
40 grand to get it together. Then all of a sudden you're already paying retail, most likely on a sub-2 deal. You're getting the great interest. You got the good arbitrage opportunity, but now you're $40,000 behind, technically 50 after closing costs and everything else. The exit on there, I always like the question, if you buy an asset today, what happens to your net worth? Does it go up? Does it go down? Or do you break even? So your time frame for breaking even on that model, based on a sub-2 modol, is probably 5 or 6 years out to break even, hypothetically. Yeah. Which I respect the long-term play.
It's also why I don't love Airbnb, right? So I saw what was happening in Atlanta. So I had 27 Airbnbs in Atlanta, Georgia. I have 0 now. Wow. Because they outlawed it. Right. And that was almost overnight. So I took some to midterm rental, sold some, recapitalized them, the ones that had enough equity that I'd owned for a couple of years. And then I have a couple of them that are co-living. And that's a big deal. But what I've looked at in the co-living space is that there are no current laws or even conversations about them. In fact, most cities like City of Mesa, Sacramento, some other cities are now putting co-living, like they're putting grants into the marketplace and tax incentives for people to do that exact thing. You look at the whole entire state of California, they just passed the ADU law where it's like build extra units in the back of your house. So I don't think it's definitely a possibility. Right. And I think I'm in a position, same thing with you. If 30% of your properties burn down to a crisp and your insurance company says, we're not paying it out, you're like, that sucks, but I'm okay.
But we're going to live, right?
We're going to live. So same thing for me. I look at it and go, worst case scenario, am I okay?
So you're 85-15 in your current holdings.
Maybe even more like 90, to be honest.
I'm surprised. That's amazing. Good for you.
Yeah. I mean, most of my stuff now, I have a 587 unit in Houston, all regular rentals, 256 unit in Springfield, Illinois, your favorite state. Rental laws.
You always say that. Detroit.
I know. So you've got, and then I've got North Carolina, which I love so much. I've got Raleigh, Durham, and I've got a big unit in Charlotte. So 1,500 of my 2,000 units are multifamily, just regular rentals. Then I've got some RV parks, some mobile home parks, and about 280 so single family. Out of the single family, I probably only have 20 of those, 30 of those that are probably Airbnb, midterm rental, and co-living properties.
That's great. I never knew that. That's good.
Yeah.
You're like me, set it and forget it, right? Just bring the cash flow, stabilize, less headaches.
You're the model. You're the model.
You're the model. You look great. The teeth are perfect.
Oh, thank you, bro. Thank you. But yeah, you are the model. So I look at rent rates are not going to go down. They stabilized the last like 18 months, right? They went up way too fast. They stabilized a little bit. They're going to continue to go up with inflation and all of those other things. And I go, okay, if I'm going to cash flow on some of these properties that are being sent to me, and let's say I don't have a lot of equity. They'd say I'm buying the property at 400, or the property's ARV is 400, I'm buying it at 380. I still don't think I have equity in that situation.
You don't.
Because I go and sell that on the property at 400, I get 370. I'm underwater 10 grand. So I'm basically going, all right, if I put 30,000, 40,000 into that, am I happy with a 2.5% rate? And I'm good gambling on that 4 year, maybe 5 year horizon that I have to sit in that deal in order for me to get out of that deal? The answer is yes.
Right.
But that's a gamble.
And then that 2.5, you always got to look and see when is the loan due on that, or it's fully amortizing.
It's fully amortizing, but every once in a while you'll get a seller that's like, let's say I do a hybrid deal or a seller finance deal where seller has, all this equity, and they go, well, I don't want to wait 30 years for my equity. They want a 10-year balloon. Well, I'm okay. 10 years, I'm good.
After the 5 years.
5 years, I'm scared. Right?
So after the 5 years, you're going to have significant cash flow. Plus, you can take private money a second and pay them off.
Correct, yeah. But then there goes your cash flow. But yeah, I think rent rates are going up, and I think that it's challenging for people when prices don't come down and rates aren't coming down. It's hard for people to cash flow. Guy like you who's well capitalized and you can collateralize and you can buy things with cash, I think you're always going to find great deals because of the way you're set up. But I think it's been the BRRRR strategy has been killed the last 24 months. Like, I don't know how BiggerPockets even still has a podcast, to be honest.
I'd have never heard it, so I don't know.
There you go. Okay.
Let's do it.
Can you imagine having a conversation with Zach Kepes every day? Like, just imagine. I got to hang out with him for a couple of years before he got too busy dating all sorts of international models.
Easy. You guys are blessed. I mean, Pace is always so funny. This is what I love to, and we'll have a conversation before your next question. It's so funny to watch people on social media, and you meet them in person, and like, is that the same person? And, you're always the same guy. That's what I love and respect about you. When you were dead broke and you got $1 million taken from you, multiple $1 million.
Shout out John May.
There
love you,
go.
bro. Thank you.
I got $1 million stolen from me as well, and it helps shape who you are as a person, investors, structuring deals. So a lot of times I say to people, some of these worst deals and the worst things that's ever transpired are the best thing that's ever happened
100%.
to you. What I love about you is you're the same guy. You're always, raunchy and volatile and funny and down to earth.
Coconut oil, guys.
I mean, I'd like to get in the van with you guys sometime.
Did anybody take the note of the coconut oil thing?
This guy's excited over here.
100%.
It is the best. It's no joke.
I'm like, how does Adam and Eve not sell this stuff, bro? Like, why do I have to go to Costco?
I'm surprised you haven't come out with your own brand. Subto. Okay, all right.
Gen Z home ownership. Nearly 1/3, 31% of Gen Z are living with their parents. Experts point that high school student loans, debts, interest rates, and housing shortages will be a problem in the future. So, what do you guys think about that?
Good times create weak men create hard times. So I look at how much easier it is for people to live, the access to information, food, options, and all it does is make most people weak and lazy, right? So you look at the new generation, it's like, it's all about me, my experiences, my life, my this, whatever. And the work ethic has mostly gone out the window, at least from what I've experienced. And I think that people living with their parents is on the rise for sure. I look at my son, Asher. You know Asher well. Asher, responsible kid, grew up in our family, but his friends are like, they're 17, 18. They don't even care about their driver's license, bro.
Amazing.
Like, you couldn't wait to get your learner's permit. I guarantee it. Like, I need freedom. I need to be out there. I need to be able to do the thing. And it's just a different demographic. I don't even think it's affordability. I really don't think it's affordability. I think it's just that they want different experiences. They care about more about experiences than they do about career advancement. And they don't care about how do I go out and figure out how to do all these things. They just complain, and they're a bunch of snowflakes.
It's interesting. From the people that I've interfaced with as well, my average tenants are probably in their 30s. Like, I'm not even seeing any demand. So I think that's exactly right, that a lot of people are lazy. They're passive. They're just going to say, hey, I could just be sitting here and being taken care of on a silver spoon, and no one's pushing them out. Asher's blessed to have an entrepreneurial family and socialize in a good family. I think it's up to the, older generations to instill the work ethic in them and stop handing them everything that they want and put them out on the streets.
Yeah, and I think that, that there's a book called The Fourth Turning, and it has that quote in it, which is, good times create weak men create hard times create strong men create good times.
I love that.
And so right now we are in the phase where good times are creating weak men, and weak men are creating hard times. Mm-hmm. And so you have a lot of weak men, and I don't just mean men, I mean just humankind. Mm-hmm. It's gotten so easy for everybody to live their lives and access to food. I mean, look, you walk around, you're a fitness nut. I respect that about you. I love you for that. You walk around, and I'm sure you notice how many people are overweight in the United States. Mm-hmm. It's like, you go to Walmart, bro. You don't ever go to Walmart.
I do go to Walmart. I go everywhere. Okay. Come on now. Listen, I like to buy my real estate, discounted. I got to shop at Walmart too.
Okay. But you notice everybody, our country is overweight. Our country is overly lazy. Our entitlements are going up. People's the checks for housing. I mean, you see what happened. You see homelessness going up. Drug use is going up. Did you see what California just did they took tax dollars, they went and built a high-rise condo unit.
Put the homeless in there?
And they put it was an average of 1 bed, 1 bath, $600,000 cost.
Amazing. Free.
And not only is it free, they're giving them blankets and food and clothing and this and the other. And
we'd like to live in there.
Bro, me too.
Yeah.
They'll give you food. There's a rec room on every single floor.
Yeah.
And that's paid for by tax dollars. So you're making life easy for people. When people have options, they're going to take the easier option.
Yeah, you're exactly right. I see a lot of entitlements with some of my tenants. I have a lot of Section 8 housing, by the way. And it's crazy because I'll go up and pick up, knock on the door if they don't make their copay, right? A lot of times in Section 8, it's a 90-10 or 95-5 or whatever it is. They're required to make a small payment, as they should, at least. You show up, and what kind of car does the average Section 8 tenant drive?
Mercedes or something?
Something fancy, nicer than my cars, I'll tell you that much. But yet, sorry, Zach, times are tough. Well, it looks like you're paying your Mercedes, or you own it free and clear, and you're getting your food stamps and this and that. The amount of entitlement and excuses, it's crazy. Not all of them, though. I have some really good Section 8 tenants, but a lot of them, too, when I go out and I evaluate other people's houses or consultatively and I look, it's baffling to me.
Here's the question. Is Section 8 growing, or is it slowing? It's growing, right? There's more demand on Section 8. There's waiting lists for Section 8.
Yeah.
And then when you look at how Section 8 is delivered, so it becomes a cultural thing where mom and dad will live on Section 8. Guess what son and daughter do? They go and live on Section 8. And it becomes, that's the way they're educated. That's the blueprint they have. So look, I want to help people out. Obviously, we pay our taxes. We do our thing. You supply Section 8. I supply Section 8. But my Section 8 tenants don't go anywhere, right? Whereas my other tenants are like, why are you leaving? Oh, we're buying our first house.
Right.
I've never had a Section 8 tenant go, I figured out how to buy my own house.
I've had them ask me, do you do rent to own? I said, I sure do. They said, how about we do this? I can get Section 8 to pay $3,000 a month instead of $2,000, and you take that $1,000 and you put it towards the home. So that's illegal, by the way. It doesn't work. So it's like they're working the system to utilize that overage to essentially get a free home. I respect them. I mean, that's an intelligent proposition. It's illegal. It's not going to happen. Do I do rent to own? How are you going to qualify? What do you mean qualify? I'll just get you some more money from the government. It doesn't work like that. It's crazy. I literally have had multiple.
I've never had that. That's interesting.
It's crazy. Do you do rent to own? I said, are you in sub too? They're like, can I assume the mortgage and arbitrage?
Interesting.
It's crazy.
Guys, ready?
I will say one more thing too on that. I do find that the dynamics. How many people normally are in your rental homes, and are you seeing a higher concentration of individuals in the homes?
Oh, yeah. People are sharing rent now. It's like 2008. You remember people lost their homes. Where'd they go? They just started shacking up with each other.
Yeah.
So you're starting to see, it's not quite co-living, but it's like, hey, more roommates. Right. Splitting rent type of thing. And I think that that's going to be the fad for the next forever. It's not going away.
Right.
Government's not going to solve the problem. Nobody's going to solve this problem.
So there it is. I'm just going to create like human adult-sized bunk beds in my properties and do my own co-living. That's the move, maybe.
Why not?
We should create them.
I mean, it's just like student housing. It's like anything else. I don't think the government has never solved affordability. They're never going to. Mm-hmm. Even them going and building these units out in California. Now, LA has 7 of these projects going on. They're spending something like $20 million per building, which doesn't seem like a lot of money, but you have 7. That's $140 million that could go anywhere else. Then they're complaining about drought and this and that, and they can't even pick up the litter on their streets. They can't, it's a mess.
Disgusting. Why is everyone moving to Arizona?
Right. Because Zach Kepes will rent to own their Section 8 properties. That's
You'll get them. You'll make them owners from homeless. You should be your new advertising. If you're homeless, I can get you in a 1 or 2%. Just DM me. I got you a house. All right.
By the way, Zach, be careful when you move the table. It could fall.
If he bumps the table, whose fault is it? Oh, this is a really hard one, bro.
Got it.
Holy crap.
All righty. Next question. Unrealized capital gains.
Bro, you better file bankruptcy right now, dog.
Literally, I already have the papers waiting. If that, can you
look
ever see
look
that
at this
happen?
house right now. What'd you buy this house for?
310.
So 310, you're selling for how much?
950.
Okay, so you already have unrealized capital gains. In fact, you've owned this for 5 years. So let's think about this. If in year 1, this went from 350 to 400, you would have paid 25% of that gain that year.
Right.
Where would that money have come from? From another property.
For sure.
You can't pay this from the equity credit card.
I would be bankrupt.
I would be bankrupt.
Everybody in their right mind that owns, forget about real estate. Think about stocks, unrealized gains on everything, crypto, anything.
How about my business? If I'm doing private equity and I'm buying a business, like we bought a business called The Plant Guy and we bought a business called The Perfect Clean. Our basis in these are like $500,000. We're planning on selling it for like $5 million, right? 10x. That's in like a year and a half, maybe 2 years. Mm-hmm. I have unrealized capital gains in that situation, which is challenging. They're looking at ownership in businesses. They're looking at I look at it and go, they're illogical to like the 10th degree. So I don't believe that they're actually going to try and do it. Why are they talking about it?
Well, they need revenue. I mean, we have so much debt.
Well, no,
they need tax revenue.
They need voters that hate rich people to vote for Kamala Harris. How do I get my base that hates rich people so much? I basically say I'm going to go tax these rich mother truckers and say I'm going to take no, don't worry. It's about for people that are only worth $100 million. Okay, first off, I know you're worth about $7 billion.
I don't know what you're smoking, but I want some.
Yes. But if you look at the way bills are passed, right? They sneak things in, right? It's like, hey, I just want a little kiss. But next thing you know, they got their hand on your ass. You know what I'm saying? So what they do is they pass a bill. I'll give you a good example. They passed a bill in California last year. I think it was Bill 1840. And the bill was, we're going to take taxpayer dollars and we're going to help people that have never had any home ownership in their family, nobody in their family before, parents, anybody, grandparents, nobody. We are going to give them $150,000 towards a down payment so they can be the first person in their family to go buy a house. All right, cool. Well, you're taking taxpayer dollars to do that. Cool, whatever. If the state passed it, the state passed it. And people go, oh, there's no way. Kamala's only going after people for $100 million or more. You have nothing to worry about. I'm like, well, speak for yourself, bitch.
Right.
First and foremost, don't you have aspirations to become worth $100 million? Okay. In Bill 1840, they pass it. And then what they do is they do addendums or amendments to that bill that are minor and just little increments over time. The one that they're trying to pass right now is, oh, hey, thank you for passing this bill that allows people get, down payment assistance to $150,000. We now would like to pass this bill for illegal immigrants that have no documentation. They also have nobody in their family that's ever bought a house. So we'd like to vote on adding them to this program as well. No social security, no ITIN number, nothing.
Insane.
It's currently sitting on their table right now to get signed. So I look at the $100 million thing, and I go, guys, even if she's just saying it to ignite her base, ignite her people to get out and vote, which is smart. It's good marketing, right? If they did pass it and it only applied to basically you, it doesn't mean they can't do addendums and amendments to that thing. It makes it once it's passed, it's a downhill slope.
For sure.
And you're in trouble.
But also think about this. Let's say it did pass and, which is highly unlikely, but let's say it does because we're contingency guys. How do they determine the valuation of it? Are you going to get independent appraisals? How do you determine the value of the stock on a daily basis, right? I mean, you're getting unrealized gains on your equity portfolio. At what point are you paying taxes at the end of the month? What about the value of the real estate? Or are you just going to get independent appraisals to come in and do an audit? How are you going to determine someone's true net worth? All of a sudden, I'm going to go into the bank and refine my my net worth statements to all the auditors.
Where's the human capital that's going to get that done?
Right. It doesn't exist.
It doesn't exist.
Where's it going to come from?
It's like she's saying that she wants to hire another 18,000 IRS agents because they can't even keep up with all the audits and all the things they have going on. It's like, now you're going to add this to the plate? It's really scary to look at because when you look at Social Security, when it was originally invented, it was not meant to be a permanent thing. Social Security was meant to be temporary. Now look at it. They not only do they rely on it, but a lot of you guys probably don't know this. The federal government borrows money against Social Security to pay their bills. Now they've paid it back every year, but the federal government borrows money from Social Security to pay their bills every single year, and then they pay it back with interest. It's the craziest thing who's running this country.
I mean, if that happened, honestly, I'd say, Pace, where do you want to move to?
Bro,
man? Forget, I'm out.
We're going to Detroit.
For sure.
That's where we're going.
Yeah.
The situation with Social Security was interesting. Somebody made a comment to me about the $100 million thing. They don't change things, Pace. You're crazy. I'm like, Bill 1840 in California, they're doing it right now. What about Social Security? I go, read this article and tell me that Social Security was ever meant to be permanent. Here we are now in 2024, going into 2025. The federal government is borrowing against it. It's now a debt instrument for them to pay their other bills they can't come up with enough money for. Why can't they come up with enough money? Did you know this? And you and I don't pay a lot of federal income tax because obviously depreciation, cost segregation, et cetera. But did you know that every dollar that goes into federal income taxes, 47% of it, so 47 cents of every dollar goes to pay for debt? That's it. Not debt, interest on debt that we have.
Interesting.
So a dollar comes into the federal government, IRS, comes from your guys' federal taxes, 47 pennies of that dollar go and pay for interest on debt.
It's insane.
That's the scariest shit ever. Good luck, bro.
Thank you.
I set you up really bad on this one.
That's great. I see where I'm going right here.
Oh, of course, dude. He finds the freaking one thing. He's using coconut oil. I don't know how he's doing this.
All right.
Okay, looking good.
Contract signings. Despite the Fed signaling lower rates, contract signings for homes have dropped to the lowest level in record in last month. This indicates continuing challenges in the market. How will this impact prices?
I don't think half a point is going to change really anything. I think it's consumer confidence. I think what people are doing is they're going and getting lower interest rate credit cards. They're consolidating their debts on credit cards. Like, credit card debt is the bigger issue in all of this stuff. People are living on credit cards because inflation, eggs, all this kind of stuff. So interest rates going down gets people actually to go spend more money. And I think it causes a bigger problem. Forget about real estate for a minute. Just think about the average consumer out there. They go, oh, great, rates have gone down a little bit, lower my payment. Let me consolidate my credit cards. And so I read a report this morning in the Wall Street Journal talking about how credit card applications have skyrocketed because people go, oh, I can save $82 on my monthly payment because of this.
But I'm pretty sure that the Fed rate, the prime, doesn't have there's not a direct correlation with credit card debt. I think
it's the same thing with mortgage rates, right? There's not a direct correlation with it. There's like a floating thing. I don't know how it all attaches, but I think that will have a bigger impact than real estate really will have.
But yes, I believe, though, again, it's about the consumer confidence. So you have all these agents that are hungry for commissions and mortgage people pushing, guys, now's the time to buy. But what do they know? We don't even know specifically.
Date the rate, marry the house.
There you go.
Yeah.
Absolutely. So
sales.
They need to sell. Guys, now's the time. Prices are going to be blowing up. So let's get in now before the appreciation with these next rate drops. So it's all about marketing. It's all about exposure.
How grateful are you that you're not an agent?
Well, I am an agent.
Why? But in the traditional
vertically
sense.
integrated, correct. I couldn't stand driving people around, listening to all the nonsense.
And how do I
fake
market
information?
Yeah, fake information. How do I tell you to date the rate, marry the house, and do all that kind of stuff? Because I got a bill to pay.
Totally.
Oh my gosh, I'm rentals, man. Get rentals, guys. Get rentals.
Yeah. Play the game. Warren Buffett says it best. If you can't find out a way to make money while you sleep, you're going to be working for the rest of your life.
That's right. Boom.
There you go. Your turn.
Dang, I got to get these little slider ones that Zach gets. Like, I don't know how he sees these, dude. The higher I get, the worse it gets, too. That's the problem. Fudge, bro.
You're a contractor.
Okay, here we go.
That's a good one.
Shiz. This is...
How many hours a night do you sleep?
I'm probably like 5. That's pretty good. I've gotten a lot better. The last couple of years, I've hired a lot better people on my team, and I don't have to worry about it so much.
I mean, my perception is like you work, I'm sure people say this all the time, 24/7. You look rested. You look good.
Yeah, last night I went to bed at like 9, got up at 6. I slept 9 hours last night.
You look good.
Yeah, it was
And
good.
last time I saw you too, you look good. I was impressed.
Thank you, dude.
Yeah.
Been working out, not as much as you, but I've been working out a lot.
Look good. I'm fat.
All right.
Okay.
Next question. Multifamily housing demand, increasing demand for multifamily housing is in both urban and suburban markets. Why is this asset class growing, and how to capitalize on it?
It's growing because it's affordable, and it's growing because you can take the same plot of land that you can put 20 houses on and put 300 units on it, right? It's growing because of that. And also the people that are playing the game are playing it hyper intelligently. I think that there's people way smarter than you and me going in and going, how do we turn this into a renter's nation slowly because it benefits us? I don't think it's going to happen overnight. Might be 50 to 100 years. But you got people like Grant Cardone, a friend of mine, that goes out there and says, owning a house is the dumbest thing you'll ever do in your life. And I'm like, bro, like the average consumer, that's the greatest asset they'll ever own. It's not an asset, Pace. It's, okay, it doesn't cash flow, but it's a great storage of wealth for these people, right? The appreciation and all of these other things. To them, it's an asset. To you, it's a waste of time. I get that. So you have this nomenclature and this terminology going out into the industry where people are like, oh, just rent. It'll be less expensive. You can go out on vacations and do this and da-da-da-da-da. I think apartments are filling the need. And you have, I think it's like 7 million housing units short in the United States. How are you going to do that with single family homes?
It'll take way too long. I agree. You need the higher density. You got to go vertical. We're running, especially internally. And we're going to get into the next question about going, this virtual working, et cetera. People want to live in infrastructure. There's a need for human connection.
Right.
Okay. That's why all these people are here following you around. They want to engage with you and be close to you.
Are
belly to belly.
You've been mostly a single family guy. Me too. I'm probably known as a single family guy.
All single family. I did one multifamily, about a 62 unit back in the day. And I didn't love it. It was too small to really do something with. And it was too big to self-manage. So we had interior managers. These guys were stealing the rents. It was a nightmare. Yeah. I made a few bucks on it and I realized I'm going to stick to the single family game.
Have you had thoughts of, at some point 5-7 years down the road, going, I'm selling all my single family, consolidating into a big 500 or 1,000 unit or 2 500 unit type of deals?
I've never thought about it. I thought about it, but I just know single family. It's my bread and butter. I love it. I think there's more appreciation on the single family independently, plus the diversification play, that I'm more bullish on single family versus the multifamily. Look at the multifamily right now too, by the way. If we just take a snapshot, and of course it's today, there's been a lot of downward pressure in terms of pricing on it. Right. A lot of people, you're smart. You assume very good debt. A lot of people were so bullish on it and people pushing them to buy these deals.
The syndicators,
and all of a sudden,
bro.
the syndicators who make the money up front don't really care about your money. They just care about their management fees and upfront funds. And now what? These people are going bankrupt.
I agree with you entirely. It's one of the reasons why I see people doing syndications and raising capital for multifamily deals. And I'm like, you guys, that's a recipe for disaster. We raised capital in a syndication last year for a 160 unit, $20 million acquisition down in Tucson. And the purchase was 20 million, seller financed 15 million of it and gave us a 15-year balloon at 4%.
Amazing.
Great deal.
Yeah.
I don't have to worry about any debt issues. I don't have to worry about what the Fed is doing.
Right.
This asset he hadn't raised the rents in 11 years. It was a great asset for us, but we have a full-time guy working on in our acquisition department. I raised $5 million for it, and I had the confidence to go out to my investors and go, hey, number one, I'm the largest investor. I've already written a check for $2 million. I'm the largest investor in the deal. I'm raising $3 million. I'll do all of this stuff. People go, what about what the Fed's doing? And what about temporary debt? And what about the downward pressure? I go, guys, we've got fixed debt at 15 years.
Right.
And the guy said he'll even renegotiate at the end of 15 years if for some reason some cataclysmic situation happens.
Yep.
So that's the only way I'm getting into multifamily. The thing that scares me, the thing I love about single family is what you taught me years ago, especially when you introduced me to your banker. It's like, this is fixed debt, bro. Mm-hmm. I don't mess around with this thing if I don't want to for 30 years. People can do whatever they want, but I've got fixed, reliable debt. Mm-hmm. Meanwhile, the multifamily syndicators are freaking rolling the dice on a 3-year bridge loan,
for sure.
5-year bridge loan, going, okay, Marcus and Millichap, my lender, is going to give me money on this deal, but I've got to fix it all up, and I have 36 months to do that, to raise the rent, to then sell that off to a hedge fund. If I don't,
you don't just like miss by a little. You're done. Exactly.
And that's what's happening.
And these young
dollars.
guys look like geniuses when appreciation's going and times are good and there's demand and liquidity in the market. You're a genius. These guys made hundreds of millions laughing at us playing, oh, well, you're a small guy with a few hundred single family homes. You're an idiot. Now today, what do you think they did with all that money? They don't just take it and all of a sudden put it into Bitcoin.
Yeah.
They reinvested in multifamily, and it's blowing up in a bad way for them right now.
Yeah, the one multifamily guy that I follow that I really respect that is well known is a guy named Ken McElroy. He's here locally. Have you guys interviewed him? He's gangster. You should get to know him. He's awesome.
He's good friends with Rich Dad Poor Dad.
Yeah, he runs all of Rich Dad Poor Dad's assets. So he runs a property management company and he has 9,000 units. But what he does is build. But he plays a different game than you and I do, right? He land banks. He sits on land. He'll wait for 10 years for this thing to happen. He goes, all right, it's time to build. We'll start building. But their time horizon is 3 years. So he's playing a very different game long-term, way more macro than he is micro. But these other syndicators that are coming in and doing value add, dude, they got a ticking time bomb. Mm-hmm. That debt is a ticking time bomb situation, and that's what's happening with all these syndicators. So I know that's not the question necessarily.
I like how it evolved. But you said something critical for the audience, and I think this is key, and you're very smart. You talk about, guys, you have nothing to worry about. We're not worrying about outside influences. We can only control. We can control. We're going to raise the 5. You're in for 2. So you're only raising 3. The other $10 million fixed debt from the owner. And God forbid something happens, right? Contingency plan. He's willing to extend that debt. That's key for every deal that I do. What transpires, even on a line of credit or a takeout, I always ask the banker or look them in the eye or anybody, are you willing to extend, or can we put an option for extension, because you never know what's going to happen. Right. You can't time anything. Peter Lynch says it's best to buy, you can't time anything. If you can get a big chunk in the middle, no one can time buying at the bottom, selling at the top. Take a good chunk in the middle and move on. Just like your strategy of, hey, you still have another year on some of this stuff, you're going to test it out right now. Because if you wait till the end, somebody's going to feel your pressure knowing that you have a balloon on something and then capitalize on it. So if you sell now, you're like, hey, make me a good offer. Let's move the deal. I'll 1031 to something else. Right. You never want to wait to the last minute or to be greedy.
And that's the problem, right? The problem is I have a year. And if I see rates going down, don't I think that property that's worth right now, I bought it for 9 something. Yeah. It's worth 1.4 today. Mm-hmm. I could go, hey, let me roll the dice, and let's see if the rates are going to go down 2 or 3 more times.
And that's going to go to 1.8 or 2.
Or maybe even some people would be so damn greedy that they'd wait for $100,000.
For sure.
Whereas somebody like yourself is like, let's take the chips off the table. Let's recapitalize by 3 more deals, or just get into the next thing.
Absolutely.
And plus, I don't want to have something in my portfolio worth over $1 million. Is stupid.
Right. One of your gentlemen said the other day, 1.4 does 1.9.
You flip it.
You move it. Yeah, there's an inverse relationship with price and yield traditionally.
Hang out with this guy more often, okay? That's how you get rich.
All right, go ahead, Zach.
Okay, thanks, Luigi.
It's Luigi.
I think the audience should chime in on a question. Jeez.
Nobody's going to ask like coconut oil questions, nothing like that?
There's any questions.
How do you use that coconut oil?
Okay, so here's what you do. First and foremost, Costco has the best quality everything. So their coconut oil is the best quality. However, the problem is it's embarrassingly large. It's a tub. So like my cleaning girl is like, hey, she says to my wife, hey, for some reason, the coconut oil always finds its way up in the bedroom. Are you guys cooking something up there? My wife's like, yeah, you could say that.
Yeah, we're cooking some babies.
And so I'm like, it's so embarrassing. Like, we need to like put it in a different container.
No, I think it's great because it's very I believe in transparency.
Yes.
What's this big coconut oil for? Let me show you. Let me do a demonstration and hop on the massage table.
I've told probably a good 500 people about the coconut oil thing. Are you friends with Brian Apples on Cody Sperber's team?
I know Brian Apples, yeah.
Okay, so I'm in Chicago. I'm in Boston with him one night.
Yeah.
And I'm with a guy named John Rulin. Do you know who John Rulin is? John Rulin owns a company called Giftology.
Okay.
So it's me, Jamil, John Rulin, Brian Apples. We're hanging out downtown Boston. Jamil's getting high. We're eating oysters. It's great. And I start talking. I go, did you guys ever talk to Zach Kepes? He ever tell you? It's just guy talk.
I think he called me on the coconut.
Yes.
I think there's a text from him about it.
100%. So I'm
Green Elephant Development, Brian Apples.
Yes.
Yes.
He called you about the coconut oil. So I go,
definitely
guys,
did.
Zach Kepes, as smart as he is, all the great things he's taught me, one thing that changed my life forever was coconut oil. And we're sitting there downtown Boston, and Brian's like, there's no way my wife would allow me to just go buy random coconut oil. It'd be too embarrassing.
He did it online, and they screwed up, and they sent him like 24 things.
No.
I'm telling you, something bad.
John Rulin, who's a great gift giver,
Got it.
bought a pallet of
I knew it
coconut
was something.
oil.
Yes, he
and
told
had
me.
it shipped
Yes.
to his house.
Yeah. Did you give it to your students? What did he do with all of it?
I don't know. I can't remember, but I don't know. It was amazing. But then sadly, John Rulin just passed away 2 weeks ago.
Really?
He was hiking. Oh, shit. He had life insurance, though. That's
good. Wow.
What do we got?
All right, license to assign. Will a license to assign be required in the future? Will double closing become something that is popular or the end?
It's not going to stop. The regulations are not going to stop. I'm actually a big fan of it. I think, Zach and I have ran into some of the same people here locally that they'll knock doors of people that are in foreclosure. They'll go to put a memorandum on their house with no intention of closing.
Ridiculous, yeah. Or fake the memorandums.
Fake the memorandums. Then they hold guys like you and I hostage where you're about to close escrow. What the hell?
Pay them off.
Yeah, or you pay them off, or you go get an attorney, which is going to take a month or 2 months, and they know that, so they go, just pay me $10,000.
Right.
It's the most BS thing ever, and sadly, the National Association of Realtors is lobbying against every single state, and they're spending money to get legislators to change the laws, and they've changed it in 12 states already. Arizona is really interesting. The wholesale law states that you have to say you have an intention to wholesale. Mm-hmm. That was like 2 years ago, and it's going to I think it'll get worse and worse and worse and worse. The state that just made wholesaling illegal is South Carolina. And so what
Jerry's an expert on that.
Yeah, Jerry's an expert on it. And I own a title company in 43 states. And we are doing files in South Carolina too. But what are we doing? We're telling our wholesalers to get it under a lease with an option to buy.
Got it.
And so they're leasing the property.
Right.
Then they have an option on the deal, and they're basically letting somebody execute the option.
For sure.
So it's essentially an assignment of the option. Essentially, the option dictates and says, hey, I can assign this deal, but it's different language. Yep. And so there's smart people are always going to find a way around the thing, but it's not going to stop. And I think that you've got 7 years probably in Arizona. So Arizona's got a lot longer than some of these other states that are more influenced. But you're going to have to get to a point where you have to have a license to assign.
And I'm good with that, by the way. I think first of all, it's very easy to get your license. It's $500. It's 9 days. No problem.
But why do wholesalers not like that? It's a demographic thing.
Because, they don't like it because it's just red tape. There's a barrier to entry. It's timing. They're lazy, but they also don't want to be held to a higher standard. So they could be ruthless in their activity. Right. So it's very easy if you guys go out and get your license and you're competing against other people. You simply say to the seller, dear Mrs. Jones, you're welcome to sign whoever you want, but isn't it important to do something transparently above board with full disclosure and research the person who's, buying your number one asset in your life? Don't you want to sell to somebody who is accountable for their actions? Google me, look up my license. If I screw you in 2 years and you realize I stole your house, you can go to the board, I lose my whole living, my whole being that I support my family with. There's recourse for action. These other people, they don't believe in recourse, they believe in the Wild West. I'll do whatever I want, I'll make all this money, and there's no standard. So I'm all about standard. Who cares? Just do the right thing. Whether you have a license or not, it's about karma, period. So you're going to go around screwing somebody. It's a small world. We've all experienced the people that we know who are shady. You're going to stay away from them, and that's it.
Yeah, they don't make it in the business long. I mean, some of them make it in the business 2 or 3 years maybe, but most of them get pushed out. They get investigated. They get all sorts of things that happen to them. The bad thing and the sad thing is that the demographic of people that want to be a wholesaler also want to avoid, like you said, all red tape, all oversight.
Sure.
And they want to avoid all the expenses, right? Why does wholesale appeal to them? Well, because it doesn't really cost any money. I can get it with no money. I can go knock on a door. I can do a thing, da, da, da. So when a guy like you who is rich and you have all these accoutrements to your name, money, access, resources, and you say, well, you should have regulation. You're going to have people in the comments going like, F you, Pace. Every time I say, I hope wholesalers are regulated. I started out as a wholesaler.
Right.
I still wholesale 1 out of every 30 deals I touch. I know you still wholesale.
Absolutely.
You get a deal, you go, oh, that's a great deal. I'll wholesale this to somebody else.
For sure.
You are a golfer. You have a bag. You have 14 tools called golf clubs in that bag. You use those tools when you need to. But a wholesaler is like, how dare you tell me how to do what I do? You're rich and I'm not. And I should be able to do no EMD. You see that bullshit all the time too.
Yeah.
It's ridiculous. And so what Zach is really saying to you wholesalers is he's saying that if you're smart and you're a business person, the license actually becomes a negotiating tactic over the wholesalers that don't see it that way.
For sure.
And it becomes super powerful. I hope we have more regulation, and I hope all 50 states require a license.
It's an asset, not a liability, 100%, number one. And number two, I'm all for the non-assignable contracts, right? Because at the end of the day, if you're smart, you're going to align yourself with high, net worth individuals and OPM where you have the ability to close. So you listen, it'll be good for your title companies because they simply close, buy an open title policy and resell it.
Yep.
So it costs you a couple grand, factor it into the deal. It'll avoid a lot of headache.
Another way around this is like Zach and I have done a lot of deals together. And it's been a long time when I was out in the field and I would sell deals to him and he'd go on appointments with me. But I could easily go to Zach because I trust Zach and I go, hey, Zach, I don't want to go into this appointment saying I'm the buyer. Mm-hmm. I want to say I have a partner. Can I just use your company name, put it on the contract?
Absolutely. It's a level of trust. I close and I write you a fee.
You write me a fee,
Absolutely.
right? There's a way to do that. So there's always a way around it. And if you guys you're out there, you're a wholesaler. Here's the thing about Zach too. If I go to Zach and I go, hey, Zach, you're my buyer. I want to have my name on the contract to protect myself. I need to double close. He will also fund deals and he'll be, yeah, I'll double close that thing. I'll help you out. Like I'll bring the money to the table and make sure you can double close that transaction, whatever. There's always a way around it. The problem is you're not networking. You're trying to live on YouTube and on podcasts, and you're not out there networking and building relationships.
Strategic relationships. That's the name of every game, every business. The trust factor, the long-term relationships, and doing these deals.
Where's Arian? There he is. Arian has a question about sober living. What was both of our answers? Go call
Patrick.
Go call the right person.
Right.
It's never how, it's always who.
Yeah.
Oh my gosh, guys, this is ridiculous. Are you serious?
It's tough. That thing's...
Did you glue these things together, bro?
There you go.
Oh.
That's a good one.
That is a home inspector.
Ooh.
Oh, he's great. He's here in Arizona.
Yeah,
that guy.
Like the new builds. He inspects new builds, and his thing is the quality has dropped tremendously.
Yeah, of course.
What do you guys think about those?
I think that's accurate. I mean, it's funny when I'm walking the project over here, the Ritz and some of that stuff. The finishes for $3 and $4 million I have in my Maryville homes. I'm telling you, even better.
Yeah.
It's crazy. Well, the inflationary costs, people are concerned about profitability, and then you see the shortcuts immediately. People are just money driven. And I think long term, when we're stabilizing assets and we're holding legacy properties we don't plan on selling, spend the money to make the money. People have that opposite mentality. What's going to happen is their branding and their reputation is going to go down, and they're not going to be in business very long. That's my take.
Some people, when the demand is really high, I think people can get away with it. Sure. Sadly, because people, it's like, I don't have any other choice. Ritz-Carlton, that location,
Sick.
it's ridiculous, right? It's the only place it's a better location is where you live.
Well, I don't know. The Mormons are out east further, and that's where
right.
all the money is.
That's where all the baby making is, that's for sure. Geez. So I think people, the demand is so high that sometimes they just kind of get swept under the rug, but you're right. The reputation, if you're an individual operator, like you and me, reputation goes forever. Never heard anybody say a negative thing about Zach Kepes and how he treats and how he does things. I hope you've never heard anything negative about me. And so as an individual operator, which is like Lennar Homes is not watching this podcast, right? Who's watching this podcast is somebody going, hey, this is cool. I'm like a fly on the wall and two heavy operators, him way more than me.
That's not true. You have thousands of doors. I like how you just deflect. It's so funny. I mean, just own it. Just own it. You have thousands of doors.
Your percentage of equity is much higher than mine. So let's just say that. So you guys, if you're watching, you would look at this and go, man, this is what a true friendship looks like. These are people that collaborate with each other, make money together, respect each other, and our reputations have gone on long enough that the cream always rises to the top. And when you do crappy work and you treat your product like a piece of crap and you're trying to, not
maximize profit or screw people over,
you don't last long, especially as individual operators. You get pushed out of the marketplace. Next thing you know, you're gone.
But I also think that, it depends on your exit too of what they're doing. If they're just selling it in a good market, they're out. I don't condone it, but you're exactly right. If the demand is there's no other alternative product, people are going to buy it. But in a market where people have options or you plan on owning it and retaining it, it is so critical to go above and beyond. I mean, so many people think, oh, the pricing's cheaper for the labor, this material's good. Yeah. There was a time where I bought a bunch of what I thought was quartz. Looked good, felt like quartz, put in a bunch of my houses. Next thing I know, 6 months later, all my tenants complaining, hey, I put something down and it's getting stained. I had to rip it all out just because I saved $200 a slab. I thought it was quality. Now, not only am I pulling out the tops, the undermount sinks. Now you pull out the tops.
You're disrupting your tenants.
Disrupting that, but I took care of it right away and I put on a higher quality product and you learned. Spend the money to make the money. Forget about trying to save $100 on a slab. Just make sure the durability and the quality is there because of reputation and disruption of tenants. You're right.
It's interesting. I don't want to bring up this gentleman's name. I don't know if you know him and recognize. Do you know a gentleman that was in this business, never became a really big operator, just got shot a couple weeks ago? Do you know about this person?
I heard about.
He's here local.
Okay. Yes, I do.
Okay. I won't bring up his name.
He was at a construction site on 40th and Thomas.
Somebody he owed money to. Pop, pop, pop.
Oh, is that what happened?
That's what happened. So
wow.
My history with him is he came to me, he followed me on Instagram about 8 years ago, and he says, hey, if you're not full of shit, you'll help me get my first deal. Wow. And that was his attitude. Did you ever have any experience with him?
I met him. There was a mastermind or something that he came to, and he was a pretty loud guy that I knew, and I never interacted with him.
Okay, so I helped him get his first deal. I own it to this day. Seller was in foreclosure. I bought it sub-2. He got paid $10,000 in assignment fee. I'm the one that did all the work.
Wow.
He had the lead, so I basically paid him $10,000 for the lead, and he watched me close.
Yeah.
Okay, so then his response to that, once he got the check, was, I guess you're not as full of shit as I thought you were.
Wow.
Thanks for the compliment, bro.
Right. So by the way, thanks for the 10 grand.
Yeah, thanks for the 10 grand.
Thanks for the learning lesson, more importantly.
So then, this relationship goes on. He would stop by the office. Cody Barton and I then became partners. Cody and I, we have like 50 rentals together. We haven't bought a rental together in 3 years. Cody wants to buy more businesses, so we buy business together. But during that time when we were accumulating our rental portfolio, we had an office in Tempe. This gentleman would walk by and hang out at the office every single day for like maybe a year and a half. Wow. Extracted value, which is great. We're happy to give value. And then there was a day where I didn't reply to him for about 3 days. I was traveling, I was speaking or whatever, and I'm doing this. Look at my phone. Same thing with you. Yeah. You're the most important thing right now in my life, right? We're eyeball to eyeball. I don't get a chance to be around you a lot. So I turned my phone down. Sure. This is important to me. He then goes on social media. He's like, F Pace Morby, this, that, and the other. Effing guy thinks he's better than me and blah, blah, blah. I was like, bro, okay. Reputation and how you treat people, whether it's a flip or this or that, is so important because it compounds. It either compounds positively or it compounds negatively, right? And so what happens is he goes and partners with a guy. They break up. Surprise, surprise. Partners with another guy. They break up. And then a couple of years later, I'm on a podcast with Devin BRRRR.
Love Devin.
Devin's awesome. Yeah. And Devin goes, hey, did you hear about so-and-so? And I go, what happened? He goes, somebody stopped by that he owed money to, and pop, 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 drove off and killed the guy.
And shot his worker, the guy that was with him too.
Correct.
Yeah, I know.
And he didn't have insurance, didn't have this, didn't have that. Basically, he was back on construction site because he had lost everything. Why did he lose everything? Because the way he treats his partnerships and how he treats his products. All of that compound effect led into that. Do I believe the guy deserved it? No, nobody deserves that shit. Nobody deserves that shit. That is horrible. But there's a compound effect. Look at John May. John May stole from me, he's stolen from other people. I don't run into John May a lot around here. I think he's ashamed to, I don't know, do you run into him often?
Never.
So, but at one point he was like one of the biggest wholesalers in town.
And lenders or different
and all sorts of stuff. So at some point, and I hope John is successful, honestly. John, what he did to me was one of the greatest blessings on my life. And I'm grateful to him for robbing me. And I don't think he actually had the intent of doing that, but your reputation will compound positively or negatively.
100%.
Builders, sadly, when there's demand, I don't think it matters for them, but individual operators, it does.
Right, because how do you say, what are you going to blast? Oh, Lennar built this terrible home. No one's standing really behind it. Who is Lennar? Name a principal of Lennar. Do you know the CEO? No. Well, that's the point. You know, it was interesting because the other day there was something that kind of went semi-viral about someone anticipating what my personal net worth is, and I never talk about it. I always deflect because it doesn't really. Nobody gives a shit how much you're worth. They care about how you treat them.
Correct.
And in the comments and this whole thing, I was just sitting there and I was just enamored by all these haters and whatever, and I don't respond to them. I don't add fuel to it because I don't really care. But the greatest thing that I read in there was from a gentleman from the gym from 5 years ago that said, I know this guy treats everybody the same way, from the janitor to the things and this and that, and I'm not surprised that he achieved this because the way that he treated me 5 years ago, that guy's for real. That was the greatest comment that I read, right? Because then you really think about it. I mean, you interact, you have an opportunity, you could be a dick, you could be whoever you are. Be a good person, do good business, you know? That's the compound effect. It's the energy and the karma. It is.
It's more fun that way. So Lennar, keep doing what you're doing. I guess it doesn't matter for you, but for us, it does matter.
It's important. This is too good.
But I do want to ask this question.
Yeah.
9 inches. I've seen it.
Divided by 9. All right, divided by 9. Hung like a button on a fur coat, baby. I just like to be transparent. All right.
This is something I've been wanting to ask you guys for a while. Somewhat controversial, but you know, let's have fun with it, and then we'll just finish the game. As you guys play, let's just finish the game all the way through with Jenga.
Oh shit!
Subject to versus BRRRR.
Well, that's like comparing black and white in two separate strategies. I mean, clearly for this guy who was a genius, Subject to was amazing. It made him an incredible network and operation and made tremendous money. I'm not an expert on it. I'm a huge BRRRR guy, obviously, so that's going to be the nature of the conversation.
And
but
the reason why I asked this is because people ask that. It's like, what avenue should I go to? If I do this, should I do Subject to or should I go?
Okay, so that's a great question, and I'm going to say Sub 2, you're going to say BRRRR because that's what we do.
But I'm going to say something else.
And I don't disagree that BRRRR is highly amazing, and you're not going to disagree that Sub 2 is also highly amazing. I would also ask the person who's asking the question, do you have cash?
Of course.
Do you have a 2-year track history? Do you have this? But you want to buy your first rental? Can you find a partner that can help you operate and maybe infuse some cash and you can put a deal together? You don't have to have cash credit. If you're that person and you're more my avatar, then Sub 2 is going to be your thing. If you're more Zach's avatar, you're going to go follow his avatar. They're not one or the other.
Here, so going back to what you mentioned before on the golf course and 14 tools in your bag, I think it's always important not to be a one-trick pony, right? Agreed. You never go on the golf course and just say, I'm only going to use my putter the entire time. You're not going to be successful. I understand Sub 2, you're in my course, and I followed the stuff, and I get it. And if an opportunity came along, it was great. I would jump on it for sure, because I'd be fool not to, and I'd leverage that all the way to the hilt. For me, obviously, the BRRRR's been great, but I've also seen a lot of appreciation. I've been lucky. I don't say I'm the smartest guy in the world. It's important to do good business, have a little luck behind you, play the long game, because both strategies are important. None of this is like get-rich-quick strategies. His strategy of, listen to him, he says, 5 years in holding before things start going good. My strategy of playing the long game and the delayed return and the delayed gratification, they're both actually more similar than they are different when you look at the macro perspective of the long-term strategy.
100%. And what you focus on expands.
For sure.
And so when you focus on banking relationships and you focus on the relationships you focus on, and I focus on maybe agents that have listings that have been on too long, and I focus with wholesalers that maybe have people don't have equity, I'm just going to find more opportunities of where I expand my time, right? Mm-hmm. And so a lot of people go, well, I can't find a BRRRR deal. Meanwhile, you're like, I could find a BRRRR deal right now.
You can create it. It's not a matter of just finding it. You're like either looking in the wrong place, or you don't have the ability to create value through construction, or you're dealing with the wrong people. There's so many different factors to create equity to BRRRR something out. But I also like to say, like, here, if we're running a track race and we start, I always want to start way ahead. If we're going to run a mile and you're going to say, Zach, I'm going to give you a head start, the BRRRR strategy right out of the gate would be better because I have more equity traditionally than in a sub 2 deal. Because a lot of times you're paying more of a premium for it. But long term, if you say, Zach, that's great, but I'm running the marathon, and we're not doing a sprint here. We're both playing the long-term game, which is important. If you just say, hey, let's take a look at the first 2 years, I'm going to have higher equity percentage in the deals that I'm buying or creating equity, but your cash flow will be larger because, let's say if I'm using my lines of credit. So it's interesting to compare these. Lines of credit today may cost me 8%, prime minus a half, or now it's 7.5 today, as of today, 7.5. But all of a sudden you're taking that deal at 7. You're like, Zach's an idiot because he's got 8% money on that deal from line of credit, but I'm in this at 2. So my cash flow out of the gate is pretty much unlimited. I'm also putting in cash. I don't just feed, it costs me money to enter a deal where he can come in with 0 and he's already cash flowing. So his return is infinite. So it's really important. I mean, we can look at the micro and the macro and the granular level and where are we at in this deal. Again, I always go back and say, if I acquire this asset today, what happens to my net worth?
Everything that you're saying is 100% correct. And the other thing to take into consideration is very few people, I think, cash flow is very important to a certain degree, but that's not what's going to make you wealthy.
Right. Equity.
Equity is going to make you wealthy, which comes from what? Time, appreciation. The other thing that makes you wealthy is keeping more of your money, right? So instead of me shelling out all my money to the federal government, are you using cost segs and depreciation?
Of course I use depreciation. I'm not cost segging, but of course
some people that are buying rentals are like, nah, I don't want to worry about the depreciation and capture. I'm like, okay, well, just you, different than you and me.
Sure.
So I look at that, I'm like, I actually make more money by keeping more of my money than I go make my active income in my title company, my lending business or whatever, and I keep more of it because I do a cost seg on my commercial stuff. I do accelerated depreciation or just regular depreciation on my single family stuff. I keep my money. People don't really talk about that. If we had a whiteboard and we talked about how much money you saved in taxes and how much I saved the last couple of years, holy shit. I'm making way more of my money by keeping it than my cash flow will ever give me.
Interesting.
It's super interesting. This year, I got $14 million in tax write-offs. I only needed like 11, so I'm rolling over, and I'll have 3 year. I have $3 million coming from last year into this year because of the cost segs that I did. So I look at that, I go, okay, cash flow is great, but that was way better for me, right? And the other thing that people miss out on is the mortgage pay down.
Right. That's huge.
It's huge.
And that's equity. That's equity.
It's equity. And so you're building that delta, right? So delta, a lot of people don't know this. Delta is what I owe and what it's worth. That's the delta. The equity is after I sell it and I get my cash back, what's left over is really what my equity is, the money that's in my pocket. And so you get that 2 ways. You get that through appreciation and the mortgage pay down. And so it doesn't matter how we get there. The acquisition strategy is important to a certain degree, but really you and I are playing the same game.
In 30 years, we're going to be at the finish line at the same time.
Yeah.
Right.
100%.
But again, it's really important for people to understand, like, you didn't just get in this business 2 years ago and create, zillions of dollars. I love the fact that you came from the contracting aspect and really understand construction, so you can look at something and really evaluate, okay, what is it really going to cost me to do this? And you could build it with your eyes closed. I didn't come from a construction background, but I come from a finance background. But again, we arrive at the finish line the same way. And I like the fact that, again, it's not like, let me buy this and turn it tomorrow and flip. We're both stabilizing stuff and holding a lot more than you're selling. If I look at last year, how many deals have I sold versus what have I acquired, what transpired in my portfolio, I'm just aggregating in the portfolio. Correct. I assume you're doing the same thing.
Now, here's the other thing about this, Luigi, to the audience. It's like BRRRR or sub 2, because they'll hear me knock BRRRR on social media. But why do I do that? Because if I'm on social media, are you going to click on my thing that says avocados are pretty okay?
No, I'm not going to click on
No, but if I say F avocados are the worst thing on the planet and here's why, you're going to click on that. Or avocados are the greatest thing on the planet. They beat all other things and here's why. You're not clicking on the it's okay button. You're clicking on one of the polarizing things. And so as somebody who is branding and building a community and doing the things that I'm doing, I have to be polarizing. Otherwise, I don't get people to pay attention. Sadly, the other currency that you and I both are trading in is attention, right? Whether it's raising capital or whatever it may be, bringing in deals.
I call it top of mind mentality. It's always so important to be constantly putting stuff out there. So when there's opportunity, they think of you first.
And this is why we go on podcasts and we get to hang out, and you and I have these great conversations. This is how you and I would talk if we were at dinner, by the way. Maybe some other more foul words would be saying, but this is a great conversation. Man, if everybody in their life could have a friend like Zach Kepes, your life would be better. It is never how, it is always who. It is who you can be around. When people come to me, I'm lacking self-confidence, Zach. I'm lacking this. I'm lacking that. I'm lacking this. I'm like, hang out with somebody who has it. Hang out with the person who's confident. Hang out with the person who has the relationships with the bankers. Hang out with the person that has 10 years of track history. Hang out with the person that can go on a buy appointment and go, Pace, you're buying this too deep. Or you're not buying this deep enough. This person's messing around with you. I remember I went in this appointment with Zach. I don't know if he has a phenomenal memory, but we go to this house, has a carport. We go to the appointment. The seller wouldn't even let us into the house. Guy comes out into the dirt, and we're talking about the thing, and I go, Zach, what do you think I should offer? He goes, you should offer this. I go, what? Why? I think I should offer this. He goes, the carport, the this, the that. Well, the seller said this. Zach teaches me this valuable lesson. Basically, I took what he said, and I turned it into a phrase. He's like, the seller's taking you for a ride. Like, I turned into a phrase that was...
Which deal was that? Because I know everything. I was processing right now.
Is one of the
72nd... Mesa, the first deal when I said, hey, don't sell to Jameel Damji. I'd love to be your buyer.
Yeah.
That was the first deal in Mesa.
It was after we did that deal.
And we did a Maryville 72nd, 110th.
We didn't buy this deal. This was an appointment you went on with me. Okay. It was an appointment you went on with me. But what I took from that was a phrase that I put on a lot of my apparel, and it came from you.
Okay.
It was a lesson you taught me. The phrase I have is buyers are liars, sellers are worse. So I came up with a phrase, but you're like, Pace, the seller's lying to you. This is not, the house isn't this, and there's square footage on the back of this house. It's not really accounted for, and it's going to be a problem, blah, blah, blah. I'm like, gosh, so my price is wrong here. No, you're $50,000 off. We ended up not buying the deal, but you went on the appointment with me. Mm-hmm. You need friends like this, guys. A book is going to get you so far. A video is going to get you so far. You need to be around people like Zach Kepes. It's always re-energizing to be.
Well, I reciprocate that. I love what I read on your social media today. Who needs anything, reach out to me. How do you handle how many people reach out to you? 500, 1,000?
I haven't replied to them yet, but I'll reply to them late tonight. Or
every single person.
Every person, yeah.
That is insane. Gentleman here says, hey, I have a question on sober livings. Both of us. Boom, here you go. This is what you're going to do. Yeah. One-stop shop. It's amazing, the connections and doors you've opened for someone. That's your legacy, man. All these people here, the lives you've changed and the trajectories and the families, it's amazing. But your communities, it's incredible. Congrats on that. Of all the things, forget about net worth and all that. Nobody cares. It's the impact you have on these people. Right. That's impressive. I don't have anything like that. That's amazing.
Thank you, brother. Appreciate you.
Welcome. He took a compliment. That was amazing. Okay, good. It's hard for him to accept a compliment. That was good. Okay.
Right, anybody else have any questions?
That was it.
Give it up for Zach Kepes, guys.
We got to get a question from, these guys came from all over the nation. Who's got a question? It's crazy.
I would say for people in the audience, one of the things that is really, really needed is a detailed game plan for you when you're starting, right? You had mentors. I had mentors, still have mentors. So I still look at you as a mentor. I learned things from you.
As do I.
The way to talk, the way to describe something, the way to convey an idea, whatever it is. I learn things from you all the time. But when you're starting out and you're lacking traction, whoever's in podcast land, you're lacking traction because you're not around the right people. That's for sure. So go to a real estate meetup. Go to meetup.com. Type in real estate. You're going to see some meetups. Just go there. See what you find. I went to a couple of meetups. I can't remember the guy's name. I wish I remember. I went there, and all the guy was trying to do was sell something. So I was like, oh, man, meetups are stupid. But as I walked out of the meetup, this guy goes, hey, were you like bothered by that guy as I was? I was like, is that how it always is? And he goes, well, not really. I'm actually going to a different meetup down the road. You want to come with me? That meetup changed my life.
Amazing.
And so get around the right people. That's important. And then secondly, understand that not all advice is good for you, right? Not all advice is good for you. Some people should never do single family. Like I've got people that are like they're really built for raising capital and they should syndicate. It's not necessarily what I want to do. It's not what Zach wants to do the rest of his life, but there are people that are really good at syndicating. They're built for that. How do you know that? Got to explore, listen to a bunch of people. And what I would do is I would get in front of a handful of people that are doing the thing that you are inspired and most excited about and go, what does this look like? What are my next 10 steps for me to do that exact thing? And get a detailed game plan. Otherwise, you're going to feel like one of those things that are marketing sandwich shops or whatever,
I would say too, just in addition, like understand why you're doing what you're doing. I mean, I was coaching people and I would always ask them and break it down. Okay, tomorrow you win the lotto, you have $200 million. What are you passionate about with your life? What charities are you interested in giving to? And make that a part of who you are, because just for me to sell you a deal so you can make more money isn't going to change anything. But if you say, hey, I'm giving this money to the Mormon Foundation for kids that have cancer or something, amazing. I want to give you opportunities because I know by default that's going to impact a lot more people. Be authentic to who you are. Don't just be, I'm a Subto student, that's your identity. You have to have your own unique identity, authentic to yourself, so that your purpose is far greater than yourself and you're impacting other people, and convey that to people. Don't just be, I'm here to make money and buy real estate. Everybody does that. How are you differentiating yourself from every other person out there? There's an abundance of opportunities for everybody to win in this world. I'm a huge believer. When I first started out, I was like, it's a zero-sum game. I'm going to win, you're going to lose. I'm going to win, you're going to lose. And as you evolve and you make money, I realize, holy shit, this is amazing. I can make money and you can make money and we can both celebrate together and everybody's happy. I've never heard of a game where you can kind of tie and we're both happy about it.
Real estate is so beautifully nuanced in that way that that so many people can make money in the same transaction and collaborate with each other and have so many diverse skill sets that you all need to leverage the rest of your life. Yeah. And it's not a zero-sum game. It's crazy.
Right?
Crazy.
But that's what I thought that it was. I remember flying out here from Detroit thinking, I'm going to fucking crush it. He's a young kid. I'm going to take everybody down, bring the Detroit hustle, and everyone's going to lose. And then I was like, it doesn't really work like that. It really just doesn't, you know? Just authenticity, transparency in who you are, having fun, just, you know, not giving a fuck. So many people care so much about all this other stuff. At the end of the day, I can promise you, nobody cares. Do your thing. If Pace cared so much, he wouldn't put himself on social media and speak in thousands of people. He puts himself out there authentically, and transparently, and just says it like it is, and you don't give a second fucking thought about it. That's the power. You just keep moving forward.
Yeah, I was scared listening to you, looking at your negative comments. I was like, bro, I stopped looking at that shit like so.
No, I'm just making a point, right? Yeah. It's like whatever, you know.
I've had those too, where somebody says something like, you'll have people in the comments fight for you. And it's the greatest moment.
Those are the best, right? Like, yeah. I remember that waiter. It was the nicest guy. It's amazing how just one moment 5 years ago, guys fighting for you. Yeah. That is cool.
It is cool.
You know, but have fun. And, you know, again, it's an amazing, this is the greatest business in the world. Think of any other business in the world. If you could start again, what would you do?
Real estate.
100%. It's not even a question.
There's nothing even remotely close. Yeah. I feel so grateful and blessed that I found it. And I owe credit to a lot of the people who helped me get my start, because here's my memory. My memory was 7 years of saying, I'm going to get started. I'm going to get started. I'm going to get started, get started. It wasn't until I was 30, probably about 4 years before I met you, 3 years before I met you, that somebody finally was like, dude, shut your effing mouth. Let me just show you how to do it. Mm-hmm. Do the work. Shut your mouth. Stop asking questions. Shut your mouth. Shut your mouth. Do the work. Do the work. Do the work. And finally, somebody got me over that 7-year hump. And when I had that epiphany and I got that first $25,000 check on my first deal, 25 grand, I was like, oh my gosh, you just changed my life. I know exactly what this feels like. I now know what the difference between where this is and now where this is. I have to tell the whole world. Mm-hmm. And so you get obsessed with wanting to help other people because somebody else helped you in the pathway. I heard a great quote I've been saying the last couple of weeks. The quote was, a candle doesn't lose its flame when it lights another candle.
Right. It only illuminates.
It only illuminates the room.
Totally.
And I was like, that's real estate.
Right.
For people that are helping each other out. So
and that's what you learn, right?
Get around the right people, get around other candles. This is what's so cool about having a community and other people that are all like-minded. We're all blessed, super, super blessed. And tell Luigi he's the shit in the comments down below.
That's true. And one other very important thing that I like to say is everyone here brings unique talents that, like, I guarantee you the reason you're so successful is because you listen. You don't just talk all the time. You stop, you listen, you engage with your students and your community. And because everyone brings unique experiences to the table, from construction to finance, a new idea. I think part of why you rise to the top is because you're open and receptive. Everyone has amazing ideas and influence and, you know, things that we can grow and learn together. It's like, you don't know everything. I don't know everything, but it's important we go on the golf course. You show me how to use that club called Subject 2.
That's right.
And I could show you some stuff about some banking, and then our golf games get much better. So that's the power of
Love
friendship.
you, brother. Appreciate
Love you
it.
too, man. I appreciate it. And I say it to you before and I say it again. I'm really proud of everything you've done. It's
Thank
amazing.
you.
I remember eating with you and Laura at Chipotle on Scottsdale Road right before your big rise, and you're still the same guy. I can say that in front of everybody. Still the same giving, loving, amazing
you.
guy, and
Appreciate
a great
it.
father.
Thank you.
Yeah, and I love Laura too, by the way.
I
Awesome.
just want to make this guy proud. He's like my real estate
it.
dad.
There you go. So,